So you have heard it on the news. Interest rates have gone up a little bit this year in 2022. And the Feds are having plans to make further adjustments later this year. Are you getting worried? And what does this mean in terms of your affordability? Today, I have with me Ricardo from the One Brokerage to talk a little bit about what does this mean to home buying. Hi, this is Heather Lynn with Keller Williams Realty. Welcome to my channel. In this channel, we talk about everything that's related to real estate here in Palo Alto, Silicon Valley, and the San Francisco Mid-Peninsula neighborhoods. We talk about real estate trends and how to make repairs of your home for top dollar sale. We also talk about fun things to do in this area. Subscribe to my channel. That way you'll have one juicy video coming your way every week. Oh, by the way, we also talk about cats and wine because I'm a cat mom who loves wine. And I've helped hundreds of families buy and sell real estate here in the San Francisco Bay Area. And I would love to have the opportunity to sit down with you and talk about how I can help you realize your real estate dreams. Ricardo, tell us a little bit about yourself. How did you get into the mortgage industry?
Thank you, Heather. So I have a background in finance, right? used to work at Chase. I was a financial advisor. I have some series licenses there, and that was kind of the smooth transition for me to get into real estate.
So, you know, there's a lot of news about interest rates. What are the rates right now? Currently March of 2022, what can people expect for a 30-year mortgage, 7-year ARM, and a 10-year ARM?
Yeah, so depending, a lot of people are going towards the 30-year fixed, right? And obviously if we look back at 2020 and 2021, rates were in the 2s and the 3s, right? And that's what everybody was talking about and why you were rushing to go get a mortgage. A lot of people buying primary residences right now are not getting rates in the 3s anymore. So I'm seeing a lot of low to mid 4s for primary residences. Obviously investment properties and second homes come in higher than that. With the adjustable rate options, those work really well for people who know that they're going to exit the property in a certain amount of years. So they have a fixed interest rate for 7 or 10 years, and then they decide to exit out of that afterwards before the rate starts to change.
And what are the rates for those?
Those are about 1/4% lower than what we're seeing with the regular 30-year fixed.
Gotcha.
Yeah.
So what I'm hearing was that for a 30-year loan, you should be expecting somewhere between 4 to 4.5%.
For sure, yeah.
And then for 7-year and the 10-year ARM, we're looking at maybe 3.75-ish. Okay, yeah. Gotcha. All right, well, you know, it is a jump from last year's mortgage.
Yeah.
And so let's just break it down. If last year someone with the same income, the same credit profile was qualified for a $1 million loan with a rate increase, how much could they afford right now?
So, I mean, that would be pretty significant in terms of what the person would qualify for, right? And obviously, bumps in salary don't happen super often, and so, you know, let's assume that they were keeping the same salary, the same income from where they were qualified before. It would probably be 75 to 100K in just purchase power difference, right?
75 to 100K.
Yeah.
So the same income, the same credit profile, the individual was qualified for $1 million in loan. This year, that amount would be dropped to about 900 to 925,000.
Yeah.
Okay, gotcha. So that is a little impact on people's affordability.
Right.
What are the future predictions later year in terms of interest rates?
Well, so obviously the Federal Reserve is a little bit sporadic, but they've already announced that we're supposed to have 3 increases this year, one of which has already happened. The second one is supposed to be happening next week, which is March 14th, 2022, right? And that mainly is coming on second home loans and investment properties. So people who are going into the section where it's not your primary residence, they can expect to see an additional hit on the interest rate.
Gotcha. Yeah. So I'm hearing that in March 15th, if you're buying a second home or investment property, you're probably looking at a much higher interest rate. And do you know approximately what
I would say
would
high
be?
4s. I've done some priced out at like 5%. Really, obviously the higher the balance, the more expensive. But
Gotcha.
that tends to be the range.
Okay,
we're
so-
already creeping up into the 5% range.
So when you said higher the balance means higher the loan amount?
Correct. Yeah.
Okay. So what are the kind of the breaking point for the loan amount in terms of like a significant difference in interest rates?
Great question. So every county has county limits, right? And that's you're getting capped basically by the county and how much you can borrow on a regular conventional loan. A lot of the U.S. adjusted the pricing. So for this year now, 2022, it's increased up to $647K. That tends to be the median that we see in a lot of different counties. There are certain areas, obviously here in the Bay Area, all of our surrounding counties here, we can go up to $970K on a regular conventional loan. So what happens is after the 647, it's considered high balance and it's more expensive. So you can expect to see that if you're in whatever county you might be in, if it's above the median, you're going to see some additional pricing hits.
Yeah. It sounded like in this area, Silicon Valley, Mid-Peninsula, San Francisco areas where homes are averaging between 1.5 to 2.5 million, almost always with a 20% down. We're looking at a high balance loan.
Yeah. Well, so in that case, obviously once we go past that 970, now we're in a different category. So now it's considered a jumbo loan. Jumbo loan financing is even more expensive than conventional because it's not backed by Fannie Mae and Freddie Mac. So the government entities that back the regular conventional loans.
Gotcha.
So once we get into jumbo territory, they just become more expensive, right?
And what are the rates we're talking about right now?
Depending on the down payment. So in those, actually, some of my lenders just released, which is super competitive because there's a lot of people as those price points start to increase. If we think about it, we're here in the Bay Area. Not every house is $1 million, right? There's a lot of houses that sell for well over $1 million. So the main question is, how do people get the financing for those? They go into the jumbo category. With the jumbo financing, one of my banks just released this program that lets them go as little as 3.5% down on a jumbo, which is absolutely insane. Because 2 years ago, before COVID, 20% was the minimum. And then they trickled in, they released a 10% down program with no PMI, so that they didn't have any additional payment. It was just a slightly higher interest rate, right? And with the 10% down, that one came at a slightly more expensive cost because it was just less of a down payment. So if someone chose to do that 3.5% down program, same thing, we're going to see additional hits. But if we're talking about just 20% down on a really high purchase price, then high fours right now. So it's not too much higher than the conventional, but it's still a slight bump.
Gotcha.
Yeah.
So we should probably expect to kind of looking at interest rate between like 4.5, even high fours later this year. And I know that sounds a lot compared to what people are getting last year, but to put things in perspective, isn't interest rate still at a relatively low point? Like historically, I remember the first mortgage I got back in 2007. I'm dating myself, I know. I was paying 6.75 and I thought that was a really low mortgage rate back then. Now we're looking at the jump to high fours, mid fours. Compared to what I was getting, that's still low. So I just wanted to kind of help the listeners in this video to not get discouraged. I know we were at the very bottom of the interest rate last year.
Definitely.
This year, there's a slight increase from that, so it feels like it was a lot, but historically, we're still at the low point.
Exactly.
If you're looking to buy a home, for example, this home that we're sitting in, the homeowner bought it 3 years ago for 1.3.
Wow.
Now we're selling this home for 1.8, possibly might get him multiple offers, sell for $2 million. So historical home appreciation is probably what you could count on for buying a home, even at a higher interest rate. This might be something that's worth it. So Ricardo, thank you. It sounded like you were brokerage work with different type of scenarios and different type of buyers. Are you loan brokers that work with different banks?
Yeah, yep. So we're a mortgage brokerage. Right now we have a little bit over 95 different banks in our network. And it pretty much ranges. I mean, we have your base, regular, conventional, FHA, VA for veterans, jumbo products, obviously, right, like the one that I just mentioned. We've gotten into some commercial, so we have some lenders in our network for commercial, hard money financing. And one we've been doing doing quite a bit right now is a lot of non-conventional financing. And so, like the one that we did not too long ago for Teresa, we were almost going to be going the non-conventional route because of the income issues that we ran into. And that's also a good option too, because if someone knows that they're going to be in a different position in a couple years, then they can always refinance later, but they still have the ability to purchase the house.
Gotcha.
Yeah.
Gotcha. Now you know a little bit about the changes in mortgage rates. You might be curious as to why do people still buy a home. Watch this video right here to see how my client profit almost $500,000 in home appreciation in merely 3 years. So watch this video right here.